Welcome to the Debit and Credit Online Classroom. With this video, we are going to start learning about management accounting. We all know that the main branches of accounting are financial accounting, cost accounting, and management accounting. Financial accounting records, classifies, and summarizes the transactions which are of financial nature. Cost accounting is used to find out the cost per unit, and management accounting helps the management to take correct decisions, and it helps in planning, controlling, and coordinating also. So let us see what management accounting is. Actually, it is not a new topic for you because you had learned analysis of financial statements in class 12th, and actually this is a part of management accounting. In today's video we will discuss about the definition, scope, objectives and functions of management accounting.
Now let us see the definition of management accounting by some important associations. The Institute of Cost and Management Accountants, London, has defined management accounting as the application of professional knowledge and skill in the preparation of accounting information in such a way as to assist management in the formulation of policies and in the planning and control of the operation of the undertaking. So this is an application of professional knowledge and skill in the preparation of accounting information, which helps the management to formulate the policies and helps in planning and control of the undertakings. The reports generated from the financial accounting will help the management to take the necessary decisions, the apt decisions, and it helps to formulate the policies and helps in planning. And according to American Accounting Association, it includes the methods and concepts necessary for effective planning, for choosing among the alternative business actions, and for control through the evaluation and interpretation of performances. The American Accounting Association defines management accounting as the methods and concepts necessary for effective planning, for choosing among the alternative business actions. So this contains the methods and concepts necessary for effective planning, for choosing among the alternative business actions, for choosing the best one out of the alternatives, and for control through the evaluation and interpretation of performances. The Institute of Chartered Accountants of England and Wales defines management accounting as that form of accounting which enables a business to be conducted more efficiently. So, through taking the proper decisions at the right time and formulating the policies, and through the evaluation and interpretation of performances, the management accounting enables the business to be conducted more efficiently. Now let us see the scope of management accounting. The management accounting uses the financial accounting as the basis of information. Financial accounting gives only the net result of the operations of a business at the end of the accounting period and shows the position of assets and liabilities on a particular date, that is at the end of the accounting year. With this, the management can't take any decisions, but using this financial data, the management can take or plan the policies, and it can be used for financial forecasting also. The elements of costs which are generated from the using the cost accounting can be used in the management accounting system for further analysis so as to solve business problems and take quality decisions. The management can take decisions regarding the best one out of the alternatives using this cost accounting. Budgeting and forecasting. Management accounting includes budgetary control and forecasting techniques also. Under budgetary control, the budgets are prepared on functional basis and measure the actual performance and find the difference between the actual and the standard for taking corrective actions. If any deviation or difference is there from the budgetary ones, then we should find out the reason for this, and if needed, corrective actions has to be taken. So by this, budgeting assists the management for identifying responsibility and ensuring coordination. Cost control procedures are an integral part of management accounting process. It includes inventory control, cost control, time control, budgetary control, standard costing, etc. Taxation includes the computation of corporate income tax in accordance with the tax laws, filing of returns, and making tax payments. These are all the part of management accounting. By interpreting the data, the management can make the most suitable decisions, and this helps in advising the management accountant. We know that there are a lot of stakeholders for a business, and the reports they need are also different. So using the management accounting, we can generate the suitable reports to that individual stakeholder. That is, the stakeholders are the employees, employers, government, financial institutions, etc. So they need different type of reports. So the management accountant can prepare the reports according to the needs of these stakeholders. So these are the scope of management accounting. The main objective of managerial accounting is to maximize profit and minimize losses. It is concerned with the presentation of data to predict inconsistencies in finances that help managers make important decisions. Some of the important objectives of management accounting are planning, decision making, motivating, controlling business operations, identifying business problem areas, and reporting. Planning is deciding in advance what is to be done. It helps the management of ineffective planning. It provides costing and statistical data to be utilized in setting goals and formulating future policies. Decision making is defined as the selection of a course of action from among alternatives. It helps the management in decision making. It uses accounting data to solve various management problems. Management accounting techniques like cost volume profit analysis, standard costing, budgetary control, capital budgeting, fund flow analysis, etc. assist the management in arriving at the correct decision. Motivation means individuals need desires and concepts that cause him or her to act in a particular manner. Delegation serves as a motivation device because it increases the job satisfaction of the employees and encourages them to look forward. If the responsibility is given to an employee to do some work, same equal amount of authority should also be given for doing it. Then that will become the responsibility of that person to do it. So it will motivate that individual. By delegating the activities, that will motivate the individual to do that work in a best way. By setting goals, planning the best and economic courses of action, and also by measuring the performance of the employees, it tries to increase their efficiency and ultimately motivate the organization as a whole. So the goals will be set and plans will be given along with the authority to do that work. And after doing it, it will be measured. And so the employee knows that it is his duty to do that work and it will be measured after doing it. So the employees will try to do it in the best way. So that will increase the efficiency. And ultimately, the organization's efficiency will also be increased. And this helps in controlling the performance of the organization, because by this budgeting, the goals are set and the authority is delegated, responsibility is delegated, and the employees are doing in their best way, and automatically the control will also come. And wherever necessary, the management has to take the corrective measures. And the management can coordinate in a best way also. And whenever it deviates from the budgeted goal, the problem areas can be found out and the corrective actions can be taken. And about the reporting, one of the primary objectives of management accounting is to keep the management fully informed about the latest positions of the concern. This facilitates management to take proper and timely decisions. The management accounting will provide data. It represents the different alternative plans before the management in a comparative manner. Performance of various departments is also regularly communicated to the top management. The management accounting gives the data for the stakeholders, which can be used according to their needs or their requirement. And the data will be analyzed, interpreted and communicated to the stakeholders. The reports are made with the financial accounting data and it will be analyzed for the problems, if any, and interpreted and communicated to each of the stakeholders so that they can formulate the future plans, organize and control, and they can take the correct decisions at the right time and choose the best alternative. The management accounting techniques helps the companies to maximize their profit by checking all types of waste, which improves the efficiency and profitability. It provides internal checks and controls to protect a company's asset. Proper insurance coverage is also recommended. The correct decisions can be taken and it can also help the management for the performance appraisal, because when the authority and responsibilities are delegated to the employees, the actual will be compared with the budgets and the deviations are taken and the corrective measures are given. So by this, the performance appraisal of each of the employee can also be done. With this, I believe that you have got an idea about management accounting, its definition, scope, functions, and objectives. Thank you for listening to this. If you have not subscribed my channel, please subscribe now itself. Thank you. Thank you very much.